Now, for more, we're joined now by Mark Dow. He is a portfolio manager at Pharo Management. He's also a former economist at the IMF and U.S. Treasury. Mark, good to have you with us. You can't be a former economist, right? You're just an economist, but you used to do it for the IMF, and you were a reformed economist. Good point. Well, is Jean-Claude Trichet, is he going to become a reformed central bank chief? Because he can sort of try to jawbone European leaders, but he's leaving at the end of the month. So what kind of power does he have?
I think he might have to plead guilty soon himself. He's in a tough spot, and it's not really clear exactly what the combination of reasons are. On the one hand, it may well be that they're seeing things on the balance sheet of the banks in Europe that make them nervous about the probability of contagion. It may well be that they have too many Greek, Portuguese, and Irish bonds on their balance sheet. Or it may well be that Trichet, for those who have a bit of a memory of how this went, was one of the founders, one of the guys on the ground putting together the single currency, and he might just have too much invested intellectually to let go. But at the end of the day, I think he's going to be forced off of his position. We've been saying it for a long time. There's no way Greece gets around to rescheduling, probably Portugal either. And it's go time. We've gotten to the point now where rescheduling is on the table, and you can't take it off. The genie's out of the bottle. And if you're going to do a rescheduling, go.
Yeah, do it quickly. I mean, don't wait until the market forces your hand. Do something so you have some degree of control over what happens. Because let's look at some of the scenarios. If there is a rescheduling or a reprofiling or a default, because we got the news today, Standard & Poor's lowering Greek sovereign debt to CCC. If there's a credit event, which is what Trichet was talking about, what happens to the balance sheet of the European Central Bank itself?
That they can handle. I think what the real fear is that people no longer trust what they say. So if they say we're going to do a light dusting, a reprofiling of a Greek debt, and that's it, it's over, Portugal's not involved, Ireland's not involved, and Greece will grow its way out. And then 6 months later, they have to come back and break.
But how likely is that if you are in Ireland, if you're a Portuguese finance minister and you want the same deal that the Greeks are going to get?
Well, you may or may not. It depends on what you think the consequences are. The bigger thing is that the markets might not trust refinancing Spain. So you're at the point where Greece really, and this is brutal to say, but Greece doesn't matter. Portugal doesn't matter. And even the value of the euro doesn't matter. All that matters is the financial integrity of the financial system in Europe. That's really all that matters. And I think we're at that point now that restructuring is on the table that you have to go for it. You have to go for it in a way that you don't have to go back and revisit what you did, because that will undermine your credibility in the eyes of the market. And once you do that, it becomes very, very expensive to protect the core.
Does this vindicate the steps that U.S. Federal Reserve Chief Ben Bernanke took previously, that they went in big? And you read the comments today, Lawrence Summers, former advisor to President Obama, Economic Council, saying this is not the time to be raising rates. But that's exactly what the ECB says they're going to do next month.
Yeah, there's a bit of a, well, it is true that the policy rate is so low there, it doesn't really matter because the peripheral countries aren't borrowing at that rate anyway. The bigger issue is what they do to get these countries on sustainable footing. They have a competitiveness problem and they have a debt overhang. And now that it's there, you've got to deal with it aggressively and quickly. In that regard, both the Fed and the Treasury in the U.S. context did a good job. When they decided to go, they went all in, and that's what you have to do.
And they're still all in.
Yes. Well, they've been backing out. They're out of the banking system now. They're getting out of GM. They're backing out. And this is part of the problem, because what you see in the U.S. is that jobs are being lost in the public sector over the past few months, and the private sector hasn't been robust enough, hasn't been self-sustaining enough to pick up the slack. And that's the concern at this point. Demand is still weak in the United States because we're working through our deleveraging.
Do you think that the European Central Bank and European leaders, do you think they've wasted a year?
No, they haven't, because if you look at it, Portugal now has a program. Ireland is on a program. Their financing is taken care of. The recapitalization of the Spanish banks, while not finished, is much further along, and they've taken a fair amount of structural measures. So they're in a less vulnerable place than they were. They could have used this last year more wisely, but they did use it, and that's good. So the probability of contagion is, while significant, is a lot lower than it was a year ago.
What do you tell investors that want to protect themselves against the volatile summer?
Well, it depends on what part of the world you're talking about, but you have, at least when it comes to European bonds, you need to stay out and see how far this goes. The problem is the coordination mechanism within Europe is just slow, and there's a belated recognition on the part of many people with regard to the depths of the problem, and then they can't agree on really much of anything.
Mark Dow, Pharo Management, thank you very much. Please keep us updated as always.